BBBY's pullback today was absolutely expected, and let's go ahead and verify why. What is up, you guys? Thank you so much for stopping by once again on this fine hump day Wednesday. This is ARCa coming at you with a BBBY technicals, raw price action, and statistical thread of analysis. Before we get started, please make sure to subscribe to the channel, like the video, and share the video with a friend so that you and them could consider joining our trading community in Discord called ARCa. With that said, let's go ahead and dive right into the charts. Okay, so yes, we are looking at BBBY here on the 5-day chart, and this is the pullback that we actually saw from today's candle, and it was absolutely expected. Now, why was it expected? Let's go ahead and just put in the old LARP lines and see why. Okay, so yes, we're writing this broadening descending channel. Okay, we've been writing it for quite some time now. So I want you to know that we have absolutely recovered the inside of that channel or the wedge. And of course, when breaking an inflection point like the resistance that we were facing here from the bottom of the channel and now converted as to a support, we must come down to actually verify or validate that area of support before continuing on to the upside. Okay, so now this line right here was actually not something that I've had drawn. It's not something that I drew today. It's absolutely something that I've had drawn for quite some time. Now, the tiny little adjustment I actually just made, I can actually just be as transparent as I can with you. Please focus on this candle right over here. Focus on this candle here and the candle low from today. Okay, I'm going to go ahead and undo my changes. So, and there we go. Okay, so there. Now we can go ahead and just zoom in and redo it again so that we can see exactly what I'm talking about. Okay, so please notice here that I wasn't looking so pristine, so perfectly when I was first making this, but the gap here and a little gap here, little gap here, little gap here as well. So upon making that little adjustment, we can then see that the touch points for all of those candles actually become a little more apparent. So for example, here looks a lot closer. Now all of these are actually touching. So that actually makes it a little tighter. Okay, sometimes I just start to get a little OCD when those things start to show up, but sometimes I'm human. I can miss it here and there. All right, so an important thing to notice here is that we have absolutely converted that 10-day simple moving average on the 5-day chart as a form of support. Okay, so not only do we have that the broadening descending support down here as a valid area of support or validation of support, but we also have that 10-day. All right, so now let's go ahead and move on to, right, I just wanted to show you one thing regarding the 21-day exponential moving average. So the 21-day exponential moving average was actually used with this candle today as well as a form of resistance before a continuation onto the downside and then finding that bounce from the support. Okay, so very important for us to notice that as the 21-day exponential moving average is something that I do look at in the 5-day time frame and above. Okay, so now let's move on. Let's go ahead and talk about, guys, before I move on, actually, I need you to know that there are so many scammers and so many ARCa imposters in the comments below. Definitely know that that's not me. Please refrain from contacting or engaging in conversation with those people, okay? Because I will never give out my phone number here. None of you have my phone number, and I won't give it out. Okay, so, and I will also, I don't have a WhatsApp. Okay, so I don't have an active WhatsApp, so I will never talk to you through there either because I don't have one. All right, guys, the only places that you can find me active are YouTube, Discord, and Twitter. Okay, if you feel compelled to reach out to me and make sure that it is me, which is more than likely not, go ahead and reach out to me in my email, which is something that you can find in the about section of this YouTube profile here. Okay, so you can see the for business inquiries only, click on that and you'll see my email there. Okay, so if you feel that you need to reach out to me and validate, please go ahead and do that. All right, you guys, but I don't want you to fall for those scammers. There are thieves out there. There are a lot of people just asking for your money. Okay, don't fall for that. I'm not asking for your money. Okay, so the only way that you and I are going to transact anything are actually for the Crypstex ARC-Series indicators, and that would be through a secure form like PayPal or something. Okay, so that's not going to be anything weird. And in fact, this is me telling you now that this is the only form that I would receive payment, or maybe through a super chat or a super thanks through YouTube, or even on Twitter there's a Venmo. Those are the only ways that I can ever receive any cash from you, and I will ever accept it. Okay, you guys, so yeah, let's go ahead and now move on. Okay, so we're looking at the Crypstex ARC-Series indicators here, and the first one we're going to look at is the DBSI indicator, which is a statistical indicator that takes a metric of every single candle printed throughout the entire trading history of the asset's particular time frame, in this case, the daily. Okay, so as you zoom out, you can actually see that the indicator does take that metric, right? So why I'm saying this is because upon taking that metric, you're given a value of strength represented by a percentage, okay? So right up here, you can see that the bulls are leading the way with a 75% over the bears at a 25% on the daily chart. Very credible stuff, okay? So we did get a buy signal at the opening of this candle on January 11th, which was $2.63 from DBSI, and as well as ARC Enhanced MACD. They both gave us that buy signal, and the upside has continued thus far. Okay, so we did point out the potential of coming back to test this 13-day exponential moving average, and also the range of support that we were talking about here that I just came up with for us, right? So it looks like everything is being respected nicely, and we are potentially on the way up, but we're going to verify all of that stuff as we move along. Okay, another thing to notice here is that the contraction phase was so extreme here on the Bollinger Bands, which is this blue area here. So upon that contraction, usually something big tends to happen towards the downside or upside upon the expansion phase, starting from this Bollinger Band opening. Okay, so as you can see here, this is a massive opening here, so it is likely a very large move that is in play. Okay, so this is another indication that the upside is still probable. The enhanced MACD is absolutely still suggesting that upside, so we are looking good thus far. We're barely above the mean as well. Okay, so let's go ahead and move on to the next chart. Yeah, if you're interested in these, send me a DM or an email, and we'll go over the subscription packages, and then we can go ahead and transact. Okay, only in after that. Okay, so now let's go and let's go ahead and continue on to the next chart. So we're going to look at the immediate short term, okay, because this is something I haven't done in the last couple threads, but I want to look into this with you now. Okay, so this is the buy hourly chart, and this is how we're going to be able to tell what's happening if we're going to face a downside or an upside based on a smaller term time frame. Okay, so usually formations and candle structures I tend to stay away from within the smaller time frames. Anything really under a 4 hour is a little the credibility starts to kind of diminish a little bit as the time frames start to go smaller, right? So in this case, let's go ahead and verify a few things. So what we are looking at here is a buy formation. Okay, so first of all, we need to notice that we are in a pennant. Okay, so this pennant is actually a bullish continuation pattern, meaning that after an uptrend, when a pennant is starting to form, then this usually means that it's in preparation for a continuation to the upside. Okay, regardless of the fact, the pennant can be traded to the downside and the upside, as per the playbook rules. You have an upside and a downside objective, but in this case, since we are building an ascending one, and now it's consolidating like this usually means that the upside is more probable than the downside. Okay, but there are other risks, and there is another formation to keep in mind alongside the pennant. Okay, because another one is being formed very neatly. Okay, right under this, so there could be confusion as to what formation we're actually trading. Okay, so this is a descending channel. Nonetheless, both of them are bullish. Okay, so they both present an upside continuation. However, one lasts longer than the other, meaning that the descending channel would actually require the golden rule of 3 before continuation to the upside. So in this case, you can see a test one of the resistance. We would need to continue our movement here. Apologies, and we would need test number 2, and then test number 3, and then the true breakout upon test number 4, and then we would continue to the upside. So if we're on a buy hourly, this can likely take another 2 or 3 days for it to fulfill and move on to the upside. Now, particular to the pennant. Particular to the pennant, if we're playing the pennant and we want to break out of this, then this usually tends to break out upon 70 to 75% to the apex of the triangle itself. Okay, so the upside is still relevant here, except that one presents maybe a little bit more of a accumulation phase than another, but still, okay, so the 70%, 75% could arguably be in the following session right around here, okay? So that is also a potential. But in that case, if we do test that third test, meaning that second test of the channel, if we look at this as a channel, then we are facing a downside after that test. Okay, so I mean, those are just the warnings that I want to give you, right? So this is the natural ebb and flow of the market. It's a wave cycle. Okay, so let's go ahead and move on to the next chart. Now, this is the statistical side of the analysis, and we did touch bases on this the last time that I covered it, but I just want to go ahead and kind of validate a couple things before we continue, right? So this is volatility you're looking at, represented by this indicator BBWP. Volatility is direction neutral, and we compare it with a momentum oscillator to gauge that bias for direction. Okay, so this momentum oscillator is called stochastic momentum, which is proprietary to TradingView software and free. And I've actually backtested this indicator several times, and it's given me a read of about 75 to 91% in guessing the asset's direction. Okay, so that accuracy is not perfect, but it's good enough to factor into our probabilities, right? So upon the firing of the signal, which usually the criteria for that signal is actually for volatility to maintain itself within the critical volatility zone, which is within the 90 percentile, and or alongside the stochastic momentum averages pitched to the upside, okay, creating this oval here. That usually gives us an upside continuation. So what I did is actually I took metric of the iteration's duration, the upside thrust, and the amount of times that volatility versus momentum guessed the upside correctly versus incorrectly. So long story short, out of 35 iterations, we got 25 correct, okay? And that gave us a 71% accuracy to the upside and a 62% thrust to the upside over the span of 47 days. But in this case, it actually didn't take 47 days, and it actually did it in a very, very low end of the spectrum of that, and it has moved since about 106.87% to the upside from the firing of this signal. Okay, so, and the reason why I'm mentioning this is because if you can notice that the contraction phase is still in play with the volatility indicator, and now stochastic momentum is still suggesting that upside. So this is indicative of a continuation to the upside, regardless of the fact that we already fulfilled the statistical upside mean. Okay, so yeah, I mean, this thing can continue to the upside for more time, based on a 5-day period, of course. So there's going to be a lot of fluctuation within 5-day candles, of course, because these take 5 to 7 days to complete. So yeah, I just wanted to mention that is also in line with what we're looking at with this the broadening descending wedge. So there's still massive upside to be looked at here. Why? Because after that third test, we faced that capitulation, and then we actually try to bounce to the upside over some time and actually try to make that true breakout on test number 4. Okay, so now let's just go ahead and move on to the last part of the analysis. If you guys feel like you want to trade alongside me and kind of like chart or mark up your charts just the way I'm doing, then go ahead and look in the description below, because my affiliate link for TradingView is there as well. Okay, they do have a free account. They also have the subscription based. I for one have the premium subscription, right? Because I need really all the features that it has to offer. So yeah, just refer to that, as it will help me for my trading future as well. Okay, you guys. So now let's go ahead and look at the, first of all, we're going to look at the divergence chart, and this is going to be the last part of the analysis right after the divergence, which is the rest of the RSI signals, right? This is where we're going to piece up the last part and understand where we're moving for the following session, right? So in this case, you can actually see that I printed, per the last video, I printed 1, 2, 3, 4 drives of hidden bearish divergence, regular bearish divergence, which usually happens when momentum is making a series of higher lows, lower highs, and price action is making a series of wait just a second, guys. Sorry about that. Let me just go ahead and make sure that I do have that. I do have a few drives right over here, but I'm noticing that there is a difference. Okay, I'm sorry, there's one drive that I actually caught that's consistent of one drive of hidden bearish divergence. Okay, so that happens when momentum is making higher highs and the price action is making lower highs. Okay, so this is that. Where is it? It's right over here. Okay, so this is that drive. We have the lower highs, and here is that drive. Okay, the rest of them, please don't mind those, as this is the updated one right here. Okay, so that's already playing out as well. It's a very small pivot, but we have to keep it in consideration, right? So now let's go ahead and open up that multi-part or multi-pane so that we can understand and gauge that true bias for tomorrow's session. Okay, so like always, we're going to start off with the 30-minute immediate short-term time frame, and you can see that we can face some upside continuation on that 30-minute. It has moved above the 14-day simple moving average represented by this pink line. Okay, so, and the purple line is the RSI signal. Very bullish stuff right here. We are very much in the shallow areas of the bear weakness percentile, signaling a potential gravitational pull right into that bullish zone. But this is likely to live out fast since it is the 30-minute. Bi-hourly is still showing as an upside continuation. It looks like the 14-day simple is starting to pivot towards that upside, but we do have to keep in mind that sometimes that can be a resistance followed by a continuation to the downside. Okay, so this is feeling a little shaky, a little hesitant. Okay, so the 6-hour time frame is suggesting some sideways trading. We're getting a slight hint from the 14-day simple, kind of favoring the downside. Now the 12-hour is suggesting a continuation to potentially the way up temporarily. Okay, so the reason why I'm saying temporarily is because it looks like we're starting to cross below that 14-day moving average, or it looks like it's almost about to do it. Okay, so we are primed. Either we're going to use this as a form of support before a continuation up, or it's going to reject. But since the curvature is starting to, correct, there is the chance that we can actually move to the upside, not only because of the bounce of the 14-day simple moving average, but because we are in that deep area of the bull weakness percentile. Okay, so this is that gravitational zone that we always speak of, that where we can find a pull right back in. Okay, so if we're looking at that, this would be in correlation or in accordance with the 3-day time frame. Okay, so now let's look at the bi-daily actually. All right, so the bi-daily is still suggesting some downside continuation. So it's the corrective or the upside move would actually continue more along the lines of this 3-day. Okay, so still upside on the 3-day, and the 5-day looks a little corrective, but that can actually correct. So yeah, I'm getting a little bit of a bullish read for tomorrow, but we are still in that process of confirming our newly converted resistance into a new support. Okay, so this can take some time before we can continue to the upside. All right, you guys. So yeah, again, don't fall for those scammers. Please know that I'm not a financial advisor. Take whatever I do show within these videos as just a form of entertainment. Okay, you guys. But with that said, I wish you well, a very good night, and I will catch you at the bell mañana. Adios.